What's up, everybody? This is Dr. Nick with 𝘀𝗶𝗹𝗶 Media, and welcome to another episode of Path to a Million podcast. I apologize. The last two lives I did got interrupted, so I've got my computer hardwired now, so it should work, hopefully. So I wanted to go through this new FAQ from the SBA and Treasury. There's a couple of clarifications or updates that are in there. Some of the bigger clarifications that I was hoping would be addressed are not, but it's important to understand like everything that's going on right now. So for the banks, the way I understand it is most of the big banks have opened up their application portal. I know that Wells Fargo basically said that they're only going to loan up to $10 billion through this program, and that they already had enough applications to do that. So I think they shut those applications off on Sunday. So if you work with Wells Fargo and you are not able to, and you didn't get your application submitted in time, you may need to start talking to some local banks, community banks, regional banks, those types of things. Chase, I know, is reaching out to people about getting their documentation in and submitting the applications. Like my girlfriend is using Chase, and she was working on her documentation today. So anyway, the reason I haven't done a live in the last couple of days is just because there hasn't been a whole lot of news, and most people basically got their applications in and we're just either waiting for their individual banks or their bankers to give them answers to certain things. A lot of the questions that people have had over the last few days are like, well, my accountant says this, my accountant banker says that, da, 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 da. I mean, it literally, like, whatever the question is, there's an answer on both sides of it that I've heard from individual people. My bank says this, another bank says that. This accountant says that, another accountant says that. They're all just making their best guesses. A lot of bankers and a lot of CPAs are conservative by nature. So they are telling you that contributions and distributions and draws don't count, but there's nothing in there that says that they don't. And there's no list of like, here's what documents count, here's what don't count. So you either need to just abide by the rules that your bank uses, or you need to find someone that abides by the rules that you want to utilize when it comes to like draws and distributions. So for this, I wanted to go over this new FAQ that the SBA and the Treasury put out yesterday. There's some clarifications on a few things, but not as many as I would have hoped. One other thing I found out from my bank yesterday is that the SBA itself did not give banks direction on the like closing documents. So even if they have, like, my application has been submitted through the portal that the banks use to the SBA, but they don't have the documents that they need in order to close the loan, which means to be able to fund it and give me money. So they're waiting for those, and like the regional SBA person that communicates with the bank told my bank that they're waiting for direction from Washington on what exactly needs to be done to verify, or not verify, but to authorize the loans. And so until the banks get that, they can't fund it. He was saying that hopefully they will get that to the banks today. And if that were the case, my banker said that end of week would probably be a reasonable time frame to understand, to expect if the authorization forms and directions come in today. So, all right, so let me go through this FAQ. Some of the questions don't really apply to us, so I'm just gonna kind of breeze over those if they don't. All right, so the first one, question. Paragraph 3B III of the Paycheck Protection Program interim final rule states that lenders must, quote unquote, confirm the dollar amount of average monthly payroll costs for the preceding calendar year by reviewing the payroll documentation submitted with the borrower's application. Does that require that the lender replicate every borrower's calculations? Answer: no. Providing an accurate calculation of payroll costs is the responsibility of the borrower, and the borrower must attest to the accuracy of those calculations. Lenders are expected to perform a good faith review in a reasonable time of the borrower's calculations and supporting documents concerning average monthly payroll costs. The level of diligence by a lender should be informed by the quality of supporting documents supplied by the borrower. Minimal review of calculations based on a payroll report by a recognized third-party payroll processor, for example, would be reasonable. If lenders identify errors in the borrower's calculation or material lack of substantiation in the borrower's supporting documents, the lender should work with the borrower to remedy the error. So basically what this is saying is that you are going to do the calculation for this average monthly payroll. The SBA is, I think, doing everything it can to alleviate fears that lenders are going to be on the hook if somebody doesn't calculate things correctly. So get your documentation together, give them the forms. Because everyone is under such a time crunch, I have a feeling that most banks are not going to do some like, line by line item review of what it is that you've sent them. So as long as you've done a good faith calculation, you've followed the rules as you know them, you've given them the documentation that they ask for, that the banks, because they are not going to be held liable, are probably just going to like process it through. So again, follow the rules as you know them to be. Put the calculations in. If your bank has very specific directions on how to calculate that, follow that, because if you don't, they may kick that back out and you're just going to be wasting time. So so just be sure that, just understand that like the banks, like when you write in that average monthly payroll cost, I would guess 80% of the time, the bank's just going to assume it's correct, especially if they have a relationship with you, and they're just going to process it through. Now you're going to be my bank told me was, do your calculations assuming that you will get audited by the SBA on this. And so that's what I did. Like, don't stuff numbers in there, because if you do anything that they can show that you did fraudulently, then it's just like lying on your taxes. You're gonna be suffering the same consequences as that. So just be sure that you make a good faith effort at it. You follow the rules as you know it from the SBA, and you follow the rules according to your bank. Because again, as I've said 1,000 times, the bank is going to be the one that decides who is like basically the one. They're going to be the ones that decide who gets authorized for how much and who gets forgiven and for how much. So you've got to follow the rules of the bank, regardless if you like the rules of the bank or not. If that's where you've got to get your loan from, you're going to have to follow their rules. So that's the first question. Let me find the document again here. All right. The next one is about if small business owners are 500 or fewer employees, they're basically saying, no, you could have more, and like, so big businesses are going to get this money. So that's why I'm telling people, don't wait, because who knows if this money is going to last. Number 3, does my business have to qualify as a small business concern in order to participate? That's another thing about the like 500 things. Question 4 is about affiliation, which doesn't apply to us. 5 is about affiliation. They did a whole 16-page document on so that churches are able to get the PPP money, but they couldn't put out a 16-page document on like actual small business owner operators, like what are the rules that we need to follow. So I was a little bit aggravated by that, because I'm like, if you've got time to put out the 16-page document on this one specific thing, we should basically be able to, I'm all for like churches to be able to use it. They've got employees too. But I'm like, can you please help like the people with like 10 employees and answer some of their questions? Number 6 is about the affiliation rule. Number 7, the CARES Act question. The CARES Act excludes from the definition of payroll costs any employee compensation in excess of an annual salary of $100,000. Does that exclusion apply to all employee benefits of monetary value? Answer: no. The exclusion of compensation in excess of $100,000 annually applies only to cash compensations, not to non-cash benefits, including employer contributions to defined benefit or defined contribution retirement plans, payment for the provision of employee benefits consisting of group health care coverage, including insurance premiums, and payment of state and local taxes assessed on compensation. So actually, I need to go tell I was helping my girlfriend with her numbers today, and I didn't read that correctly the first time. So so for example, like, she's a good example. She made over $100,000 in cash compensation in 2019, which is the numbers, because you can use either 2019 or the last 12 months. It says later in this. So she made over $100,000 in cash compensation but then she also did employer contributions to retirement plans for a certain amount of money. So this is saying that the $100,000 is capped at the cash compensation, but if you did health insurance or if you did employer contributions to retirement plans, that those would, like, for example, like, let's say she put $10,000 into a retirement account, but she made over $100,000. She'll use the $100,000 in cash compensation to calculate it, but then she'll add in the $10,000 for retirement plans. And then she also pays her and her employees health insurance premiums through that. So she'll add that money in on top of that as well. And then state and local taxes, which would basically be your unemployment taxes through the state, those are added on as well. So that's that is an important part for anybody that does contributions through your business for retirement plans or for health insurance benefits. Does PPP loans cover paid sick leave? Yes, however, the CARES Act excludes qualified sick and family leave wages for which a credit is allowed under Section 7001 and 7003 of the Families First Corona's Response Act. So that is basically a credit that you got in the first rescue bill. Most people probably are not doing that, but you basically cannot get the tax credit in the first rescue bill for sick leave and FMLA leave, and also get the PPP money to cover the same thing. So you pretty much can't use the PPP loan money for anything that you're using something else for. So, like, don't use the disaster loan money. Don't use the tax credits that are available for the stuff that you are using the PPP loan for. Also, just a side note, the tax credit for employee retention, where you can get up to 50% tax credit for keeping your employees on staff, and you'll have to look at more of the details of that specifically. That's one that you have to, like, show that you made 50% less than you did the quarter in the previous year to be able to qualify for it. But if you take the PPP money, you won't be able to use that credit. So you need to make sure that you do any analysis on what's gonna be best for you. All right, question, my small business is a seasonal business. That's probably not gonna really apply, but basically seasonal businesses can use February 15th to June 30th, 2019 as their time. So if for any reason you can be qualified as as a seasonal business, as a chiropractor, which I doubt, then you could use that 8-week period in the from 2019 for your calculation. All right, question 10. What if an eligible borrower contracts with a third-party payer, such as a payroll provider or a professional employer organization, to process payroll and report payroll taxes? So the way that I think I understand this is some people will, they hire staff, but then they have, I did this when I first started. A friend of mine had I don't even know I guess it's one of these things, like a payroll provider, where they actually employ the person that you hire, and then they pay them and you pay them a fee on top of that. And I think it's mainly to, like, protect yourself against, like, unemployment claims. And I haven't done it in a long time, so I don't really remember exactly what the benefit of it was. But that's the way I'm understanding this part, is that if you use one of those companies to basically employ your employees, and then you pay their payroll and then a fee on top of that for them to manage it, then it says basically yes. Like, that you, like, people were wondering, does the company that pays my employees, are they the ones that get to claim these employees? And this answer is no, that you are the one that gets to claim them. Let's see. In these cases, payroll documentation provided by the payroll provider that indicates the amount of wages and payroll taxes reported to the IRS by the payroll provider for the borrower's employees will be considered acceptable PPP loan payroll documentation for you, basically. Question, may lenders accept signatures from a single individual who is authorized, may lenders accept signatures from a single individual who is authorized to sign on behalf of the borrower? The short answer is yes. You can look, I'll post this document so you can read. I just don't think that really matters that much for most chiropractors. It's more for big businesses. 12, question. I need to request a loan to support my small business operation in light of current economic uncertainty. However, I pleaded guilty to a felony crime. That probably doesn't apply. If you pleaded guilty to a felony a long time ago, am I still eligible for PPP? Yes. The only ineligible people are like people that are presently incarcerated, or if 20% of your equity, like of the business, is owned by someone incarcerated, on probation, on parole, subject to an indictment, criminal information, arraignment, or other means by which formal criminal charges are brought. But for chiropractors, I would guess that most of us, if you have a license and you're practicing, you're not like guilty of a felony. Actually, this was probably important. Or within the last 5 years for any felony has been convicted, pleaded guilty, pleaded nolo contendere, been placed on pretrial diversion, or been placed on any form of parole or probation. So that could, like, maybe your state board, you know, only looks back like 2 years, but this is saying that within the last 5. So I'm sure if you filled out the application, you read that part though. Question, are lenders permitted to use their own online portals in an electronic form that they create to collect the same information and certification as in the borrower application form in order to complete implementation of their online portals? Yes, lenders may use their own online systems in a form they establish that asks for the same information using the same language as the borrower's application form. Lenders are still required to send the data to SBA using SBA's interface. All right. Question, what time period should borrowers use to determine their amount of employees and payroll costs to calculate the maximum loan amounts? Answer, in general, borrowers can calculate their aggregate payroll costs using data either from the previous 12 months or from calendar year 2019, which we've talked about. For seasonal businesses, we talked about that. An applicant that was not in business from February 15th, an applicant that was not in business from February 15th, 2019 to June 30th, 2019 may use the average monthly payroll cost for the period January 1st, 2020 through February 29th, 2020. So basically, if you haven't been in business that long, you can use the first 2 months. Borrowers may use their average employment over the same time periods to determine their number of employees for the purpose of applying an employee-based size standard. Alternatively, borrowers may elect to use SBA's usual calculation, the average number of employees per pay period in the 12 completed calendar months prior to the date of the loan application, or the average number of employees for each of the pay periods that the business has been operational if it has been in operation, if it has not been operational for 12 months. So basically, you can take an average of however many employees you had per pay period in the 12 completed calendar months prior to the date of the loan application. Question, should payments that an eligible borrower made to an independent contractor or sole proprietor be included in calculations of the eligible borrower's payroll costs? We've talked a lot about this. No, any amounts that an eligible borrower has paid to an independent contractor or sole proprietor should be excluded from the eligible business's payroll cost. However, an independent contractor or sole proprietor will itself be eligible for a loan under the PPP if it satisfies the applicable requirements. So again, you cannot use independent contractors or sole proprietors in your payroll cost calculation. They have to apply themselves for, like, basically their own business. Question, how should a borrower account for federal taxes when determining its payroll costs for purposes of the maximum loan amount, allowable uses of a PPP loan, and the amount of a loan that may be forgiven? This is an important part, actually, because the way that I filled it out was so anyway, I'll tell you here in a second. Under the Act, payroll costs are calculated on a gross basis without regard to federal taxes imposed or withheld, such as the employees and employers' share of federal insurance contributions act, FICA, and income taxes required to be withheld from employees. So I'm going to just get through this and then I'll kind of explain. As a result, payroll costs are not reduced by taxes imposed on an employee and required to be withheld by the employer, but payroll costs do not include the employer's share of payroll tax. For example, an employee who earned $4,000 per month in gross wages, meaning before taxes are taken out, from which $500 in federal taxes was withheld, would count as $4,000 in payroll costs. The employee would receive $3,500 and $500 would be paid to the federal government. However, the employer's side federal payroll taxes imposed on the $4,000 in wages are excluded from payroll costs under the statute. So when you're calculating, use your gross number. So what they actually make, before taxes, that's going to be the number that you use to calculate. Question: I filed or approved a loan. So I filed as a borrower or approved a loan application as the lender based on the version of the PPP interim final rule published on April 2nd. Do I need to take any action based on the updated guidance in these FAQs? No. Borrowers and lenders may rely on the laws, rules, and guidance available at the time of the relevant application. However, borrowers who previously submitted loan applications that have not yet been processed may revise their application based on clarifications reflected in these FAQs. So for example, if you calculated your payroll cost using the employer side of the FICA tax in the payroll cost calculation, you don't need, if it's already been submitted, you don't need to go back and change those. But if you have not submitted your application yet, if you haven't done your payroll cost calculations, make sure that you are using the gross amount, not the gross amount plus the employer's side of the FICA tax. So basically whatever you pay somebody before taxes, that's what you're going to, including the federal and the state withholding, all of that stuff is included. It's before tax money that you are going to be using in your gross payroll calculations. And then lastly, are PPP loans for existing customers considered new accounts for FinCEN? That doesn't really apply to us. So, so there was a little bit more clarification, especially that last question about how to calculate the payroll costs. I can't believe that they didn't have that in there before, but such is life. Let's go through some of these questions that are on here. Phil, still waiting for Wells Fargo to get their process together. Yeah, so if you, just from what I know about Wells Fargo, if you didn't get your application or your request for an application in before Saturday with Wells Fargo, or maybe before Sunday, you won't be able to apply there. Char Jones, I had to upload my W-3 with my application, otherwise I couldn't submit. Yeah, everything's going to be, or every bank's going to have their own rules. Joseph Altier, when will we get money? I sent it in Sunday. No idea. Every bank is different. Jeff Ludwig, my accountant, said the draws don't count. Banker said follow your accountant's advice. Do we need to reapply with a lower amount? If we keep with the original application, how do we show documentation for the banks? That's it, again, it's almost every single one of these individual situations that you guys are going to ask me about is going to be, you're going to have to talk to the bank. Your accountant doesn't know anything. Your accountant doesn't know anything more than what I'm sitting here telling you. They're reading the same documents that I've read out loud on these lives. So the banks are the ones that need to make a decision. They're just trying to not have to make a decision, basically. Phil, how could you account for an independent biller that you pay on a monthly basis? I don't know about a biller. I mean, well, if it's a 1099, you cannot use them. I can't, that is locked in stone. There is, if you put in a 1099 at this point, you are risking, I don't really know if it would be the fraud portion, but it would definitely not count towards your loan forgiveness. So even if you snuck it through and you got the, because the interim rule that they put out on the 2nd specifically said you can't use independent contractors 1099s. So they're not, I would imagine most banks understand that at this point, but honestly, I've seen applications where they have you put in 1099s into their big banks, that because somebody sent me a screenshot of it. And so this is what I'm talking about. The banks barely know what they're doing. So, but I'm telling you that by the time it comes time for forgiveness, if you did get approved using that 1099 and then you ended up using the money to pay a 1099 contractor, I can almost guarantee you will not get it forgiven, because they have been so clear on not only on the April 2nd rules, but now on this FAQ document. They just don't do it. Don't put it in there, because you're just going to risk using the money. If you pay that biller using your PPP money and then you submit to the bank that you sent that 1099 employee a check, by then they'll probably have it together, and they'll be like, oh, that doesn't count. And so you've already paid them, so you're out the money, and then you're not going to get it forgiven. So just do not use the money. Do not use the 1099s in the calculations. Don't use the 1099s. If you did get approved for it, don't use that money to pay 1099s. The 1099s, the independent contractors, the sole proprietors, this sounds like it maybe as a service that you're paying some biller, like he or she has a company that does billing for chiropractors, like they have multiple clients. They've got to file on their own. You do not look for ways to like juice this average payroll number, because that I think is what's going to get people into trouble. So if there's any other questions, I can answer those, but I'm going to post this FAQ document that I read off of, but it's basically on the SBA website if you guys want to find it. So, all right. And if I see anything else that pops up, I'll jump back on and do another live and answer any questions on it. But hopefully they'll give a little bit more. The next thing that I think they're going to give direction on is going to be the forgiveness portion of it, and I'm hoping that will come out here in the next week or so, because once you get the money, you need to make sure that you're using it correctly so that it will get forgiven. But again, as long as you're paying it to your payroll, as long as you're paying yourself and your staff the way that you always have, whatever the rules are that the bank is setting for getting approved for money is probably the same rules that they're going to use for getting relieved for money when it comes to the payroll, or forgiven for money when it comes to the payroll side of things. And then remember, you can use the non-payroll costs up to 25%. So hopefully that helps. I'll see you guys later.